Have you ever dreamt of achieving financial freedom? Imagine a life where you can retire early, travel the world, and pursue your passions without worrying about money. It's a dream shared by many, but few know the path to get there. What if I told you that you don't need to be a millionaire or win the lottery to achieve financial independence? What if the secret lies in a simple yet powerful concept called compound interest? Most people believe that building wealth requires a large sum of money up front. The reality is, with patience and the power of compounding, even a small amount of money can grow into a substantial fortune over time. In this video, we're going to demystify compound interest and show you how it can be your secret weapon to building wealth. Don't forget to subscribe and hit the notification bell so you never miss an update on how to grow your wealth. Compound interest is often called the eighth wonder of the world, and for good reason. It's the snowball effect of earning interest on your initial investment and then earning interest on the accumulated interest. This means your money grows exponentially over time, not linearly. Unlike simple interest, which only calculates interest on the principal amount, compound interest allows your money to work harder for you. Think of it like a snowball rolling down a hill. As it rolls, it picks up more snow, growing larger and larger. The longer your money is invested, the more it grows, and the faster it grows. The key is to start early and let time work its magic. Even small, consistent contributions can have a significant impact on your long-term wealth. Let's break down compound interest with a simple example. Imagine you invest $1,000 in a savings account that earns a 5% annual interest rate. At the end of the first year, you'll earn $50 in interest. In the second year, you're not just earning interest on your initial $1,000, you're also earning interest on the $50 you earned in interest. So, your balance at the beginning of year 2 is $1,050, and you'll earn 5% interest on that amount. This means your interest for the second year will be $52.50. Instead of earning a flat $50 each year, your interest income is increasing. Over time, this compounding effect creates a snowball effect and your wealth grows exponentially. The true power of compound interest is unleashed over long periods. To illustrate this, let's consider two investors, Sarah, who starts investing at age 25, and John, who starts at age 35. Both Sarah and John invest $1,000 annually and earn a 7% average annual return. By the time they both reach retirement age 65, Sarah will have accumulated significantly more wealth than John. This is because Sarah's money had an extra 10 years to compound. The earlier you start investing, the more time your money has to grow, and the more significant the impact of compounding will be. To quickly estimate how long it takes for your money to double with compound interest, you can use a handy tool called the Rule of 72. Simply divide 72 by the annual interest rate you expect to earn. The result is the approximate number of years it will take for your investment to double in value. For example, if you invest at a 7% annual interest rate, it will take approximately 10.3 years for your money to double. The Rule of 72 is a powerful tool for understanding the potential of compound interest. Now you might be thinking, that's all well and good, but how does $1,000 turn into $1 million? It sounds impossible, right? But the truth is, it's entirely achievable with the power of compound interest and time on your side. Imagine you're 25 years old and decide to invest $1,000 in a diversified portfolio of stocks and bonds. You're just starting out, and you commit to investing $500 every 6 months, or $1,000 a year, consistently. You know that slow and steady wins the race, so you don't get caught up in trying to time the market or chase the latest investment fads. Let's assume that over the long term, your investments earn an average annual return of 7%, adjusted for inflation. This is a reasonable expectation for a well-diversified portfolio. The key is to stay invested and let compounding work its magic. As the years go by, your investment starts to gain momentum. Each year, you contribute your $1,000, and your existing investment earns interest on top of the previous year's interest. Remember the snowball effect? This is it in action. At first, the growth might seem slow, but as the years turn into decades, the power of compounding becomes increasingly evident. By the time you reach your 40s, you've been investing consistently for 15 years. Your initial $1,000 investment has grown significantly, and your annual contributions have added up. You understand that the longer you invest, the more significant the returns. Fast forward to your 50s. You've been investing for a quarter century now, and your portfolio has grown substantially. Your friends and family might be surprised by your financial success, but you know it's not magic. It's the result of disciplined saving, consistent investing, and the power of compound interest working its magic over time. You're now in a position to increase your contributions without significantly impacting your lifestyle. You increase your contributions to $2,000 per year, further accelerating the growth of your portfolio. By increasing your contributions as you earn more, you're adding more snow to the snowball, accelerating its growth even further. Now, it's important to acknowledge that the stock market doesn't always go up. There will be periods of volatility, recessions, and market corrections along the way. You might even see your portfolio value decline in the short term. However, don't panic. During market downturns, it's crucial to stay calm and avoid making emotional decisions. Instead, stick to your investment plan and continue making regular contributions. Market downturns can present excellent buying opportunities, allowing you to purchase more shares at lower prices. The key is to stay the course, remain patient, and trust in the power of compound interest to generate long-term growth. Let's take a closer look at the numbers and see how compound interest can turn your $1,000 into $10 million. We've established that a 7% average annual return is a reasonable expectation for a well-diversified portfolio over the long term. Using a compound interest calculator, we can project the growth of your investment over time. Remember, you started with a $1,000 initial investment and committed to contributing $1,000 annually. Assuming a 7% average annual return, your investment would grow to approximately $100,000 in 30 years. Now, let's fast forward another 10 years. At the 40-year mark, your investment would have ballooned to over $200,000. You might be thinking, sure, the math looks good on paper, but does this actually happen in real life? The answer is a resounding yes. History is filled with examples of ordinary investors achieving extraordinary returns through the power of compound interest. One of the most famous examples is Warren Buffett, widely considered one of the most successful investors of all time. Buffett's investment philosophy is centered around long-term value investing and the power of compounding. He started investing at a young age and has consistently reinvested his earnings, allowing his wealth to grow exponentially over decades. Another compelling example is the growth of the S&P 500 index, which tracks the performance of 500 large-cap U.S. companies. Over the past 90 years, the S&P 500 has delivered an average annual return of around 10%. Now, let's bring it back to your $1,000 investment. While achieving a $10 million portfolio might seem like a distant dream, it's not as far-fetched as you might think. By staying committed to your investment plan, increasing your contributions over time, and harnessing the power of compound interest, you can turn your initial $1,000 into a substantial sum. Remember, the key is to start early and be consistent. The earlier you start investing, the more time your money has to grow and compound. Even if you can only invest a small amount initially, the most important step is to simply get started. Time is your greatest ally when it comes to building wealth through compound interest. To truly grasp the importance of starting early, we need to understand a fundamental financial concept called the time value of money. This principle states that $1 today is worth more than $1 tomorrow. Why? Because money you have today can be invested and has the potential to grow over time due to, you guessed it, compound interest. The earlier you receive a sum of money, the more time you have to put it to work and benefit from its growth potential. Imagine you're given the option to receive $1,000 today or $1,100 a year from now. Most financially savvy individuals would opt for the $1,000 today. Why? Because receiving the $1,000 today allows you to invest it immediately. At a 5% annual interest rate, your $1,000 would grow to $1,050 in a year. This means that by choosing to receive the $1,000 today, you would end up with $50 more than if you waited a year for the $1,100. This concept highlights the opportunity cost of delaying investments. Every day you wait is a day lost in terms of potential compounding. Procrastination is the biggest obstacle to building wealth. The earlier you begin, the more time your money has to grow, and the easier it will be to reach your financial goals. Remember, investing is a marathon, not a sprint. There will be market fluctuations and periods of uncertainty. However, by starting early, investing consistently, and remaining patient, you can ride out the storms and watch your wealth steadily grow over time. Don't be discouraged if you're starting later in life. While starting early offers significant advantages, it's never too late to begin investing. The most important step is to take action today. Even small contributions add up over time, especially when coupled with the power of compound interest. The journey of 1,000 miles begins with a single step. Take that step today. The compound advantage. Throughout this video, we've explored the incredible potential of compound interest. We've seen how a seemingly small investment of $1,000 can snowball into $1 million or more over time. We've also debunked the myth that you need to be wealthy to build wealth, emphasizing that it's consistency and time that truly matter. Remember Sarah and John? Starting just 10 years earlier gave Sarah a considerable advantage in wealth accumulation, showcasing the profound impact of time on compound growth. The earlier you begin, the more time your money has to work for you, generating returns that compound upon themselves year after year. It's not just about starting early, though. We've also highlighted the importance of staying the course. The market will inevitably experience ups and downs. There will be periods of uncertainty and volatility that may tempt you to withdraw your investments. However, it's during these challenging times that discipline and a long-term perspective are crucial. Start your journey today. The beauty of compound interest is that it's accessible to everyone. You don't need to be a financial expert or have a huge sum of money to get started. What you do need is the commitment to start today and the discipline to invest consistently. Even if you can only spare a small amount each month, the power of compounding will work its magic over time. Remember, the journey of 1,000 miles begins with a single step. Take that first step today. Explore your investment options, start small if you need to, but most importantly, begin investing in your future. Whether you're saving for retirement, a down payment on a house, or your children's education, compound interest is your secret weapon to achieving your financial goals. The path to financial freedom lies in understanding and harnessing the power of compound interest. Start early, invest consistently, stay patient, and watch your wealth grow exponentially over time. Your future self will thank you. Visit our website today to learn more and start your investment journey. Don't wait, your future begins now.